Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to go through all of the stocks that I purchased this year. It's a list of 10 stocks. I'm going to show you what I paid for them, where they stand today, and basically give you a summary of my stock market performance here in 2020. Obviously on this channel I cover a lot of different stocks, but there's not enough money to buy all of them. So this will show you which ones I decided to jump into and why and where they stand not only now, but in the future. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before jumping into any investment. But if you like stock market analysis and personal finance videos, then make sure you subscribe to the 40 Finance channel. Thank you to everyone who has supported the channel this year. And as we begin to approach the end of 2020, I want to let everybody know I've got a lot of fun things planned here for 2021. In this last couple weeks of the year, or last week of the year, I'm not buying anything in the stock market unless there's some sort of incredible dip that I'm not projecting to see this week. So most of my next buys are going to occur in 2021, and I will keep you updated on all those. And I have several other upcoming announcements that I think you'll be excited about, so stay tuned to the channel. All right, so kicking things off with the only stock that I sold in 2020. I bought 10 or 11 stocks, and I only sold one, and that was Turtle Beach Corporation. And my cost basis on that one was $10.59. I sold at $17.08. And really the only reason I sold on this one is because I had been in it for a very long time. My initial purchase of this one, I think, was in 2018, and it was actually for just under $25. Stock went through a lot of ups and downs in that time. It's very small. You can see $370 million market cap. It had a ton of shorts on it, and when I got the opportunity in the pandemic to buy it super low, I think at like $6 or something like that, I really brought my cost basis down. And then I was starting to get to a point in the year where I needed to make, or I wanted to make, some other investments that you'll see on this board. And so I sold out, took my 62% gain on that one. But kudos to everyone in Turtle Beach. I'm so happy that this one should reach $25 in the near future. That PE ratio at 992, it's arguably still a good deal. But I ran my time with them, and I wish all holders of Turtle Beach the very best. It is a fun company to watch, and it's a fun company to talk about. All right, stock number 2 on the board is actually the largest position in my portfolio, and that is Visa. And for all the pandemic wins that were out there, Visa was not a winner necessarily. As you can see, we're just now creeping back to pre-pandemic highs. My cost basis on this one is just south of $190. It's only been up 11.7% this year. I'm not sure where the S&P is landed as we enter the last week, so I'm not sure if it beat the S&P or not. I'm guessing no. But with Visa, I am not the least bit discouraged despite the slow recovery this year. As you can look back and see on multiple videos I've done, Visa is really getting stuck with the lack of travel and cross-border payments. However, their payment volume is still in a very good place, and they've done well considering how much is lopped off from travel and cross-border payments. So in my eyes, this is a company that was faced with some challenges in a core segment of its business. It persevered through those challenges and basically ran, almost flat for the year. And I see the next 5 years as nothing but positive. So while Visa wasn't a big win for me this year, I look at the next 3 to 5 years as the opportunity at hand, and I will not be selling this stock anytime soon. All right, stock number 3, and very close to Visa, but still just shy of my top holding, and that is PayPal. You guys know that around the summertime, I got really bullish on PayPal after reading several different articles and plans for the future. I got in at 187.39 across multiple buy points. Right now, it's up 27%. And PayPal's another one you can watch multiple videos of mine on to see why I'm so excited about it. But nothing changes. It has run up quite a bit. You see here since, I don't know, maybe the election or so, and your PE ratio, you know, it's under 100. It's running hot for PayPal standards, but, you know, there's a lot of other seemingly overvalued stocks out there. So I think eventually over the next couple years, PayPal's EPS will blend in very nicely with this P ratio. So again, this is one that is not for sale in my book for several years. All right, next stock on the board is DraftKings. This was an IPO purchase that I made this year that I'm very excited about. DraftKings is a sports gambling and daily fantasy sports platform that I've spent a lot of time with over the past couple years as a big NFL football fan. And long story short, I waited a little bit after the IPO and eventually got in at $34.45. I think the IPO was in the neighborhood of $20 or $24, something like that. And then I couldn't believe how fast it ran up. I eventually got in and I managed my cost basis down across a couple of these dips. But I couldn't be more bullish about this one for the long term. I have no plans to sell it. Sports gambling in America is going to be an industry that grows significantly over the next 2 to 3 years. And it's basically, you know, waiting for more and more states to legalize it. So this is one, you know, it's great that I'm plus 47% as of today. But I really have sort of plus 100, plus 150% expectations for this stock over the next couple years. We'll have to see how the year goes with legislation as far as getting more states online. But in the back of my mind, I would target like an exit on DraftKings, probably at the start of the NFL season in 2022, maybe even 2023. That's, you know, looking ahead, that's where I'm thinking, but I'm in no hurry, and I know that there's a lot of untapped potential still left for this one. All right, next stock is a long-term dog of mine, Molson Coors Beverage Company, TAP. This is one that I have had for several years, I think 2016 or 2017, and it has went down for a long time. And so what I did in the pandemic, the only reason I bought this stock was because of the low prices that were being offered, and I managed to lower my cost basis to $43.93. I think when I first started buying TAP, my cost basis was in the 70 range. So I'm up 3% for the year, but the longer term play here, I'm not sure where it stands for me. I did not want to take a loss on a dividend stock that I think, you know, slowly over time has potential. And lo and behold, here in around the September-October timeframe, Molson Coors launched a whole new concept on how they're going to grow the company. They're expanding outside of beer, which is a declining segment. They're all in on seltzer. It took them forever to get there. But there is some positives for Coors in 2021, particularly with the return of public events, seemingly with the vaccination. So while I'd love to have my TAP money back to invest in much better growth plays, I think that you throw in a dividend whenever that gets reinstated. It was cut off this year for obvious reasons. And I think that I'm going to give this growth plan from the CEO at least a year, mostly because I've been a bag holder for so long and I'm finally at par. So I'm just going to ride it out and we'll see. It could be one that I sell in 2021, particularly if it hits like a $60 a share or something like that. But we'll see how it goes. All right, next on the board is TJX Companies, best known for their stores TJ Maxx and Marshalls. This is one that I've had very similar to TAP in the sense that I've had it for 3 years or so. And prior to the pandemic, everything at TJX was going swimmingly. But then, of course, there was a lot of store closures, things like that. And my cost basis through the pandemic, when I was able to lower just a little bit, it landed at 48.08. This stock is up almost 42% this year. It is a dividend stock. This is one of the few specialty retailers that is still growing and opening locations. My family and I, we visit TJ Maxx, Marshalls, Home Goods all the time. And there's a lot of positives with this company, and I plan to hold this for some time. And you throw in the fact that many retailers are probably going to end up bankrupt in 2021, certainly a lot of the other specialty ones. And I see TJX as not like a huge growth company, but you add the dividend and you think about the physical retail rebound that we're going to see next year, and the sheer fact that they'll have inventory, as much inventory as they care to buy on the market when some of these other companies close, I think it's still a good play for a couple more years. All right, next on the board is Rocket Companies. This, I believe, is by far my biggest dog of the year, plus 2.8% on a cost basis of $19.84. I think even TAP beat this one out. But again, I have zero plans to sell. I got in this one at the IPO. It ran up to about $30, and where it sits right now, it has a ton of short interest in it the last I checked. So I'm thinking, quite frankly, this is going to be one that you really need to get into spring or summer, because that's where the housing market will start to take off again. There's so much speculation about a housing crash. I've talked about this before. The only crash that I see, quite honestly, is in the big metropolitan areas, New York, LA, etc., where people are fleeing. If you go around the country to the Midwest and Floridas and Texas and Arizona, Las Vegas, real estate's on fire. So I like what the opportunity is for Rocket. It sucks that it's sort of, flatlined here over the past several months, but I'm sticking with it. I got a good cost basis. And in general, I just like the opportunity for this company to grow their revenues. And they've made a lot of progress in revenue growth over just this past 12 months, and I see nothing but positives going forward. All right, next on the board is Etsy, where I have a cost basis of $133.24, up 35% from my particular position. Etsy, though, has had a heck of a year, and there's plenty of people that made more money than I did off this stock. But this eventually just turned into a really nice long-term interest for me. I think that these online marketplaces are getting so big out there, and I think Etsy's right at the top with a kind of unique selling proposition. And it just seems like they have figured out their market. They have international opportunity. They are making things work for them, and they've had a huge increase in account holders and users. Some of that was originally around the face masks because there was such a shortage in that world back in spring. But what it's really turned out to be is just a great user acquisition model on something that was short in supply, then the growth of e-commerce. And that is a management team that's making the most out of every opportunity. I'm very excited for it across the long term. I have no plans to sell this one. Wouldn't surprise me if 2021, this one was flat or perhaps even a couple bucks negative at certain points during the year. But from my standpoint, I'm holding long multiple years on Etsy. All right, my next stock is TSM, Taiwan Semiconductor Manufacturing Company. And this one was, it was sort of interesting how I arrived at this one. mostly because I've been interested in chip stocks and I keep staring at them, and I've done a few videos. It's been very hard for me to pick one. So finally, I think in summer somewhere, maybe before summer, I just bit the bullet and I was like, you know what, I'm just going to go with a pure manufacturer. Everybody who's got a vested interest in chips looks to TSM for some sort of manufacturing partnership. So in my world, manufacturing is a couple levels higher than I typically play. I'm just glad that I got in and got a piece of the action in chips and semiconductors, because I just don't see how that slows down over the next few years. I was lucky to get in at 78.52. It's just had another big run up. I'm up 35% for the year, and this is a dividend stock, which is nice. So again, this is one I just don't see a world that I sell it anytime soon. In fact, I'd probably be more likely to add to this one in 2021. All right, next stock on the board is my version of the pandemic play, and that is SmileDirect. They are very similar to Invisalign, except they use a mouthguard system for teeth straightening. You can go back and see my deep dives on this one. I got in pretty low at 764. We're up to 1245. That's plus 64.5%. And I still feel good about this one. They have not even nearly bounced back from a terms of sales and customer interest to what they were seeing prior to the pandemic. So it might take a couple years, but I could easily see, this one being anywhere from a 5 to 10 bagger for me over the long term. I don't think that happens this year, but I do think holding this one for 3 to 5 years will pay off handsomely, and I feel lucky that I got in at 764. All right, and last one on the board was actually my biggest gainer, funny enough, and that was the Bitcoin Trust, GBTC. This is a pretty small position for me. However, it's done really well lately. I bought a bunch of these during the pandemic when Bitcoin was slumping, and I picked up some shares, just more or less as a hedge against Bitcoin bouncing back. It certainly has here lately. Going forward with Bitcoin in terms of my investing outlook, I feel good about the future of the price of Bitcoin, mainly because there are so many large investors and large companies that are getting in on Bitcoin. So I feel really good that that market will stabilize. I have no idea where it goes in the future, but anytime you have big time buyers, that is going to affect the price. I would say it's unlikely that I buy any more GBTC, and that is just because PayPal will have an investing platform that I'll likely experiment with. And frankly, just as a stock market investor, it's a lot easier for me to just pick up companies like PayPal, Square, and some of the others that are doing a leverage play on Bitcoin. I'd rather just own the stock of the company. If they make money from Bitcoin, then that will in turn trickle down to their earnings per share. All right, guys, so that's a look at the 10 stocks that I bought in 2020. Looking ahead to 2021, I have a lot of money that I've been squirreling away. I haven't bought any stocks since the election, so whatever that is, like November 4th or something like that. I bought some of the dips heading into the election, and that was it for me, and I do not project that I will buy anything again until after January. So I'm going to use this week to kind of go back on a few things on the channel and get prepared for 2021. I think it's going to be an exciting investing year, and I'll be going into more detail about my thoughts and the plans for this channel on that here in a week or two, so stay tuned. If you enjoyed this video, please give it a like and subscribe. We'll see you on the next video.